Okay, so in the last video, we talked about how to figure out the interest on a note. Now we're going to talk about how to record it, specifically if a note is issued to basically offer customers the opportunity to a little more time to pay, but also charge them some interest. So an example, it's page 396, but it says that W.A. Bunco basically owes us $6,000. And they came to us and they said, hey, we can't pay right now. Is there a way we can have an extension? And we said, well, we don't want to give you more time to pay unless you wanted to pay us interest. So, and they said, okay, well, we're okay with that. So we issued a promissory note stating the fact that they can pay us in 30 days at a rate, and they need to pay interest on the amount for 12% interest on the amount in 30 days, and the amount that they owe us is $6,000. So $6,000 is the face amount. The date of this is 11/21/2020, we'll say, and it's a 30-day term, and the interest rate is 12%. So we know now the total interest is going to be $60. Well, the first entry, we're issuing a note in replacement of that accounts receivable, so we need to show that. So we're going to increase notes receivable for the face amount of $6,000, and we're going to decrease accounts receivable for the amount of $6,000, just basically moving it from one asset to another, but correctly showing on our books the fact that it is moved from being an account receivable to now it's an interest-bearing note receivable instead. So when they actually pay us for this on December 21st, how are we going to record that? Well, first thing, we got to know the maturity value in order to know how much we're going to get paid. Well, good thing we have this calculator over here. So $6,000 for the term of 30 days at a rate of 12%. We run it through this formula, which this does for us, and we know that the total amount they're going to pay us is $6,060. So that should be the cash that I received, $6,060. Now, the issue is that not all of that is actually for the receivable. Some of that is also interest. So after they pay us, they no longer owe us this note. So we need to get rid of the note receivable, but that amount was only $6,000. So we would credit notes receivable for $6,000. But obviously, as we don't balance, we can't be done. Can't be done with this entry. So the other part is interest. And in this case, since we are earning this interest based on letting them have more time to pay, it is interest revenue for $60. So that would be the remainder of the $60 difference would be interest revenue and be booked as such. So that would be all fine and dandy if that worked. So if we said you can have this note and they pay us in 30 days, then this is all we need to do. But what happens if they don't pay us in 30 days? Well, that creates a bigger issue, because now they still technically owe us this money, and not only owe us this money, they owe us the interest as well. But the note has ended, the term of the note has ended, so technically the note is over with. So what I'm going to do if they don't pay, so this is if they pay us like they should. So if they don't pay us, and we might have to eventually write it off, but at least for now, if they don't pay us, what that's going to look like is we're going to move that money back into accounts receivable. But I'm not going to just move the $6,000. They don't owe me just $6,000. They owe me $6,060 because they owe me not only the accounts receivable amount, but they owe me the interest amount as well. So if they didn't pay us, this is me moving it back. I'm going to go ahead and get rid of the notes receivable because that's ended. The legal term has ended. So get rid of the notes receivable. I credit that account for $6,000. And then I'm going to go ahead and still book the interest revenue. Remember, revenue is revenue when it is earned, not when it is paid. So I did already earn this revenue because I let them have the extra time. So, it is an earned revenue. It is and has already been earned. I just have not yet been paid for it. No different than accounts receivable, where I book the revenue as soon as it actually happens, whether or not I'm actually paid for it. I believe that will be the last video for Chapter 8.